All right, let's dive right into this explainer, breaking down some pretty fascinating insights from the GeneCapsule source material. Today, we're going to look closely at why this exact year is turning out to be the ultimate pivot point for global corporate strategy. You know, for a long time, the whole conversation around sustainability has felt, well, a bit like a distant promise, right? Like something companies talk about doing eventually. But as we unpack this analysis today, you're going to see a massive shift taking place right in front of us. We are officially moving from high-level theory to boots-on-the-ground operational reality. It's a complete paradigm shift in how global business is conducted, and getting a handle on it is absolutely crucial for anyone navigating the corporate landscape today.
Now, what's really striking here is the sheer urgency of this four-digit number. It's 2026. We are literally in it right now. For years, corporate sustainability targets were always pegged to these super distant dates, 2030, 2040, maybe even 2050. And let's be honest, those distant dates made it incredibly easy to just kind of kick the can down the road. But the deadline for corporate recalibration, it isn't in some far-off future anymore. The deadline is today. The pressure is no longer about what an organization plans to do a decade from now. The immense, unavoidable pressure is on what they are doing today, in this current calendar year, to completely rewire their operations.
So if you're suffering from greenwashing fatigue, you might be asking yourself this exact question about environmental, social, and governance pledges. And honestly, you absolutely wouldn't be alone in thinking that. Over the last few years, the acronym ESG has been plastered across pretty much every corporate website, investor deck, and marketing campaign out there. It really began to feel less like a transformative business strategy and more like, a mandatory buzzword that companies just threw around to look good. Consumers definitely grew skeptical, investors grew impatient. We basically reached a critical mass of pledges without actual proof. And that deep skepticism is exactly why the shift we are talking about today is finally happening.
Which brings us to recalibration. The crucial point here is understanding that we are moving way past those PR exercises of the past right into a strict recalibration phase. And recalibration isn't just a tweak, it's not a minor adjustment, it is a necessary correction. It essentially acknowledges that the past state, that whole era of theoretical promises and glossy sustainability reports, was fundamentally flawed, or at the very least, incomplete. The future state, which begins right now in 2026, is entirely about operational reality. It's all about taking those lofty feel-good goals and forcing them into the everyday nuts and bolts machinery of how a business actually functions.
Okay, Section 1. The Great ESG Pivot.
The GeneCapsule analysis makes it crystal clear. The days of relying on slick marketing and distant pledges are entirely over. We are witnessing the end of an era. Companies simply can't survive anymore on the goodwill generated by just stating they care about the environment or governance. The market, regulators, stakeholders, they are demanding receipts. They want to see the math. This pivot means that if a sustainability goal isn't backed up by a real operational mechanism to actually achieve it, it's no longer viewed as an asset. It's viewed as a massive liability.
Let's move on to Section 2, Defining Operational Sustainability.
So, what does this actually look like? It's a brilliant illustration of the shift from ESG being just a standalone reporting department to becoming a fundamental operational mandate. Think about how companies used to operate. Sustainability was usually this siloed department down the hall that produced one big annual report. Well, operational sustainability totally shatters that silo. It demands absolute integration. It means environmental and social goals are now living directly inside the core business operations. They're built right into the daily data management software. I mean, imagine linking executive bonuses directly to live carbon dashboards. It dictates how supply chains are fundamentally structured from the ground up. It is no longer an afterthought. It's the very foundation of the business model.
Now, to understand how this recalibration actually happens in the real world, we can break down operationalizing global sustainability into 3 concrete, actionable steps. Step 1 is integrating data. This means tossing out vague estimates and replacing them with hard, verifiable metrics. We're talking dashboards that track carbon or social impact with the exact same rigor as financial profit. Step 2 is overhauling supply chains. A company can't just look at its own office buildings anymore. It has to look at every single vendor, every supplier, every logistics partner, and force them to align with these new realities. And step 3 is enforcing mandates. This isn't optional guidance. These are strict, non-negotiable rules dictating daily operations. If a department doesn't hit its operational sustainability metrics today, there are real immediate consequences.
Which leads us right into Section 3, why 2026 is critical. Look at the incredibly short runway between today and the end of the year. This proves exactly why this is an immediate operational pivot, and not just some distant future goal. Just look at the progression here. By May 2026, we hit the mid-year recalibration reality check. This is where organizations have to honestly assess if their theoretical pledges have actually translated into operational changes. Then, by Q3, the focus aggressively shifts to those supply chain overhauls we talked about, requiring vendors to literally prove their compliance. And finally, by Q4, the end-of-year operational mandates take full effect. The clock isn't just ticking, it's practically out of time. The sprint is literally happening month by month.
All right, Section 4, Theory versus Operational Practice.
This maps out the recalibration perfectly. On one side, we have the past, old ESG. And it was comfortable. It relied on pledges, beautifully designed annual reports, printed on recycled paper, marketing campaigns. Essentially, it was an exercise in corporate narrative. But on the other side, new ESG. It is rigorous. It relies on seamless data integration and incredibly complex supply chain overhauls. We are looking at the evolution of corporate responsibility, from what was basically a public relations strategy into a hardcore operational science.
And finally, Section 5, the recalibration takeaway.
So what's the bottom line? The absolute crucial point here is that organizations must abandon empty buzzwords and embrace concrete operational sustainability right now. To summarize this whole journey, first up, we are witnessing the permanent migration of ESG from the PR department down to the factory floor and the data centers. It is now fully operational. Second, 2026 is the absolute immediate deadline. The time for planning, over. The time for execution is here. And third, those theoretical pledges must become integrated data. If an organization cannot prove its sustainability through hard, verifiable, operational data, the market is simply going to leave them behind.
As we wrap up this explainer on GeneCapsule's insights, I really want to leave you with this final thought to consider. Whether it's about the brands you support, the companies you invest in, or even the organization you work for, look closely at what they're doing right now. Are they genuinely ready for this 2026 operational reality? Are they doing the really hard work of integrating data and overhauling their supply chains? Or are they still comfortably relying on old, theoretical ESG pledges that just don't hold up in the real world anymore? It's a massive question, and honestly, the answer will likely determine which organizations actually thrive in this new era and which ones become entirely obsolete.